happy Memorial Day. Today is May 31st, 2021. Hope you have a great weekend with your family, friends, or lovers. Today, this is Professor MoneyPigTrading. We're going to talk about the Chinese hot money actually flowing to the stock markets, and also who are the winners and losers in the US-China tension. And just realize this is a really big driver for the market in the next probably 1 or 2 months at least. And in case you're not aware of, we feel like this is the first video before we make the talk about the US stock market in the next 1 to 2 months. Really quick disclaimer, we're not a registered financial advisor. This is just for education purposes. Please invest at your own risks. And last week, in case you're not aware of, China actually hit the commodity trading for retails. The reason is they don't want retail to have too many exposure to the commodity trading. But that's only the service reason. The reason that the service down below is because China GDP actually growing started to slow down. And also US going to start infrastructure plan itself. So China's actually really afraid of inflation going to affect their slowed down economy, and therefore they want the commodity price to slow down. And it's actually a really, really big transition, because in the past 10 to 20 years, the Chinese economy has been growing aggressively and pushing out the commodity price. And on the other hand, the US is actually really afraid of inflation in the past 10 to 20 years. And now the world is changed totally 180 degree. And that's a really big deal for the market. Right now, after that news, this is the copper chart in the copper future. The daily chart, you can see after that news come out, the copper actually pulled back, the same as many commodities like corn, sugar, etc. Right now, they're all holding an EMA support. Will they continue to drop? Depends on the infrastructure plan. Especially copper is a very important element metal for EV batteries. So if the infrastructure plan is released on the US side, very likely we're going to see all this commodity continue to push up together with the grand reopening from major economy in the world. On the other hand, 2 weeks ago, China also hit the crypto trading. And you can see we also may discuss in the last video. We'll provide the link down here. If you haven't watched it, make sure to take a look as well. Right now, crypto's holding the 200-day EMA, like we mentioned in the last video, 32,000. If that level breaks, which is possibly because now it's forming a bear flag, we're probably going to see 20,000. So if you haven't watched the last video, our suggestion is act gradually. Don't all in right now, because very likely we're still going to see the crypto market continue to tank from here. And of course, it could start to bounce from here as well. So it's really hard to tell at the moment. So adding gradually is probably the best strategy here. And because the money right now is leaving commodity and also the crypto, and surprisingly, we're actually seeing a lot of money flow back to the Chinese stock market. This is a Shanghai composite daily chart from investing.com. You can see since March, the Chinese Shanghai market has been sideways consolidation. Ever since the crypto trading ban news come out, the Chinese stock market is actually pretty bullish, pull back a little bit. On May 23rd, once the commodity trading ban for retails come out, you can see the Shanghai market just break out, all the money flow into the Shanghai market, and now finally break the range, possibly going to consolidate here and inch higher. And it's actually very funny because we just mentioned that the Chinese market, the GDP actually growth slowed down. However, the Chinese stock market is actually breaking the range and pushing higher. So one of the MoneyPig Discord member actually had a really great question: is will this Chinese commodity trading ban affect the U.S. industrial stocks and energy stock? Consider a lot of commodity price potentially going to pull back down. So we kind of cover this topic because once Biden announced the infrastructure plan, it's actually going to hold up the industrial stocks pretty well and actually pushing a lot higher from here. On the energy stock, it really depends on COVID and also the infrastructure plan as well. So let's take a look. US GDP actually is bouncing right after COVID and then slowed down as expected. And now after slowdown, dropped to 4.3, is gradually going up each quarter. Last quarter, the GDP growth in US is actually 6.4. And since now the Biden's plan again is going to announce a huge, many trillions of infrastructure plan, and also probably build US version of the One Belt, One Road plan. And that's probably going to push the US economy with the great GDP growth even to double-digit percent. On the other hand, the Chinese GDP growth is actually slowing down, as we mentioned. In the past quarter is actually dropping to only 0.6%. It's probably going to linger around 0% percent GDP growth from here, and that's why China right now is so afraid of inflation, like we mentioned. So very likely once the infrastructure plan is announced, very likely in July. Right now, there's a lot of uncertainty in Washington D.C. right now. Industrial stocks right now we're putting XLI, which is the ETF, the biggest U.S. ETF for industrial stocks. Will probably push out from here. Right now, the daily chart of XLI is forming a bull flag on the daily chart, holding the EMA support. Every time you hold a bull flag after some sideways consolidation like this one, you actually run up 2 to 3 weeks to the upside. So very likely, we're expecting XLI actually to push up from here, break the previous high 106.8, push to around 110 probably in the next 2 to 3 weeks. Same thing with crude oil. Right now, it dipped back a little bit after the commodity ban come out. Right now, it's pushing back pretty heavily because a lot of major economy, their COVID daily new cases are dropping like US. So a lot of expectation on the grand reopening. That's why the crude oil is pushing up pretty heavily to the upside. And we are expecting crude oil to break this 67.98 1-year high, and probably going to break around 70. And later this year, we're probably going to see the range of between 70 and 75, and probably sideways consolidate there or pull back until next year. We'll have to see how the COVID and the economy goes next year to decide where the crude oil will go. But because we're expecting more crude oil upside, that's why we're holding a lot of XLE, which is an energy ETF in our 401k, expecting XLE is currently outperforming the market right now, and will continue to believe it will continue to outperform, even though XLE has been sideways consolidation for about a month or two. And the other question I want to address really quick is who are the winners and losers in the U.S.-China tension, right? So the first obvious winner is the U.S. steel stocks, X, CLF, XLI, industrial ETF we just mentioned. Look at the X, which is a steel name. And you can see on the daily chart on the left side, since COVID, it run up from $4 all the way to $26, almost $30, and pull back down, holding the EMA support. Once the infrastructure plan is released, we're expecting X to continue to push out. And CLF is the same chart, holding the EMA support, should continue to push out once the infrastructure plan is approved. Because with all these bridges, road, pipes, they all need steel, right? So there's no way that steel stock is going to just stay here. It will continue to go up. Their revenue, their EPS will continue to be improved probably in the next 10 years. So it's a really big bullish cycle. The other obvious winner, probably not that obvious to many people, is the US 5G stocks. Because now the US-China tension, you probably know there's a Huawei, Zhongxin, they're all banned in China, in US stocks, in the US market, sorry, not the US stock market, US market. Therefore, US 5G stock like INFN, look at their amazing price movement in the last 4G cycles from 2014. It moved up from around $6 all the way to almost $30, 500%. That's a 4G cycle. Now this 5G cycle is probably going to be even bigger and longer, right? And because there's no Huawei and Zhongxin in the US market, a lot of these US 5G suppliers and equipment providers, they can take the whole US market, and we're expecting their margins to be way better than the last 4G cycle, and the same with their revenues. So definitely check a lot of these 5G names, and one of the examples, INFN here. And also the EV names, electric vehicle names that relies less on the Chinese market, like Ford as an example, because now Biden's going to push for EV, right? And they don't want US to fall behind the EV tech, the market and the technology to China. Is going to promote EV. And any EV names that has less Chinese market shares to their revenues should benefit during this tension, because the US market is going to grow, the subsidy will grow as well, and Ford is one of perfect example. Ford only had 10% of its revenue from China, and most other revenues are from US and Europe. So right now, the 4 weekly chart is breaking the daily downtrend, a weekly downtrend. This is a weekly chart. Back to February, break around $10. And now, because the amazing Ford F-150 full electric announced 2 weeks ago, a lot of attention got into Ford, hot money coming, which is pretty amazing, and break the daily weekly downtrend. Will probably continue to push up in the next 5 to 10 years if Ford really become one of the major EV leader, as their CEO says, in the next 5 to 10 years. And we're very proud. Once the Ford actually break the weekly downtrend, we actually got into Ford around $10 and is now up almost 40% on long-term investment. So what are the losers for this U.S. and China tension? Tesla is one of the very obvious case because almost 30% of its revenue and has continued to grow year to year is in the Chinese market, right? So this year, if they rely on Chinese market 35-40%, then this tension between U.S. and China is going to heavily bearishly affect Tesla stock price, and we actually see that kind of pricing already, right? Tesla actually dropped from $900 all the way at one point to $550. That's almost 45% drop. In the next Tesla video, we'll actually discuss more details about this event. But if Tesla continue to focus so heavily on the Chinese market, we're expecting this price probably going to continue to dip lower from here. So any bounce for Tesla stock price is probably a good place to take some profits and reduce the holding. And that's our plan as well. And some obvious loser is the U.S. listed Chinese stocks like Baba and Baidu. Right now, originally, they're hoping that the market is hoping that the Biden, once being inaugurated, potentially he might be more friendly to China, so those stocks won't be delisted. Now we're seeing the opposite. He's still very tough to China, and a lot of those stocks now will have the delisting rule in the next 3 years if they don't pass the auditing criteria announced by the U.S. government. They will have to be delisted. And so a lot of interest of this Chinese stock in listed in U.S. now decreased so much. We can see the volume continue to drop and send us the price. And a lot of them now decide to dual list in the Hong Kong exchange if they haven't done so. And that will also causing some suspicious to investor in U.S. and also make a lot of this Chinese money who invest in the U.S. stock market for Chinese names will start to move back to Hong Kong. So we're going to see all this U.S. listed Chinese stock continue to drop. Every bounce is probably a good time to start to get rid of them, take profit or take loss. And if it's loss, probably hedging in every bounce. It's probably not a bad idea. So yeah, that's the topic for today. Just want to highlight we have a pretty decent long-term investment program on Discord with a really good average return per trade and winning rate. And we also have swing trading program which focus more on momentum option trading. If you're interested in our Discord community, make sure to check on www.moneypigtrading.com. We also have Twitter, YouTube, Instagram, Facebook group, our own MoneyPig Trading. Feel free to follow us for the latest contents. If you haven't liked this video, that will tremendously help us. Make sure to like it and follow us. And thank you for watching. I'll see you in the next video shortly.